All right, today we're diving into IHH Healthcare, one of the biggest private healthcare players in Asia. They've just dropped their latest quarterly results, and let me tell you, the headline number is a big one. But underneath that shiny growth figure, there's a really fascinating story about how they're dealing with rising costs and pressures across the industry. So let's break it all down, how they did it, and what it all means for what's next. You know, the best way to get the vibe of the quarter is to hear it straight from the top. The group's CEO, Dr. Prem Kumar Nair, he immediately points to the main theme here. Yeah, the performance was strong, but it happened against a backdrop of payer pressures and cost inflation. That really sets the stage perfectly. This isn't just a story about growth, it's about growing when things are tough. And boom, there it is. The big number that everyone's talking about. A 16% jump from last year in both revenue and EBITDA, which is a key way to measure profitability. Honestly, in this kind of economic climate, double-digit growth like that is seriously impressive. It really makes you wonder, how did they pull that off?
To get to the bottom of it, here's our game plan for this breakdown. We'll start with those headline numbers, then we'll unpack the strategy behind them. After that, we'll take a quick tour of their key markets, look at what's on the horizon, and wrap it all up with the bottom line. Okay, let's jump right into our first section, the headline numbers. This is where we go beyond that big 16% and see what the details are really telling us about the health of the business.
Okay, so this table gives us a fantastic snapshot. Revenue and what's called EBITDA, or operational profit, both up a very strong 16%. But here's where it gets really interesting. Look at those last two lines. The official profit, PATMI, is up 15%. But if you take out any one-off gains, think of it like selling a building. It's a one-time cash boost, not part of your day-to-day business. Their underlying core profit is actually down 13%. So what does that tell us? It says that while the company is growing its sales like crazy, those headwinds the CEO talked about, like higher wages and pricier medical supplies, are definitely putting a squeeze on their fundamental profitability. And this chart just makes that top-line growth crystal clear. You can just see that leap from 5.6 billion ringgit last year to 6.6 billion now. That extra billion comes from a mix of things: serving more patients, focusing on more complex and higher value treatments, and of course, adjusting their prices to keep up with inflation. So how do you manage that? How do you grow your revenue that much while your core profitability is getting squeezed? Well, that brings us to our next section. Let's unpack the why. We're going to look at the specific strategies IHH is using to navigate this. First off, let's decode a term the CEO used: payer pressure. In simple terms, this is basically when insurance companies, both government and private ones, push back on how much they're willing to pay for medical services. It's a constant battle for hospitals and clinics, and it can really squeeze their profit margins. Getting this concept is key to appreciating just how well IIH has been managing its business. So, what's their playbook? This slide lays out their three-part strategy perfectly. First, they're going head-to-head with inflation, really trying to keep costs in check. Second, they're making a really smart pivot to more efficient models, like daycare services, which are just cheaper to run than a full hospital stay. And third, over in India, which is a huge market for them, they're making their Fortis and Gleneagles brands work together like a well-oiled machine to boost efficiency. This isn't random. It's a very deliberate, very targeted response to the pressures they're up against. Now, let's see how this strategy is actually playing out on the ground. It's time to move to our next section, where we'll take a quick tour of IHH's most important markets to see where the real action is happening. You know what's pretty amazing here is just how diverse their revenue is. Looking at the year so far, Turkey and Europe are actually their biggest market segment. Then you have the core hubs in Singapore, Malaysia, and India. This shows you they aren't just relying on one country's economy. Having this wide footprint helps spread out the risk and lets them chase growth wherever it's popping up. And this one really tells the story of the quarter. On one side, you've got Malaysia and India, just firing on all cylinders. They're getting a boost from medical tourism and that smart Fortis Gleneagles integration we talked about. But on the other side, you have Singapore, which was a bit more of a mixed bag. Its profits were almost flat, feeling that squeeze from payer pressures and costs, plus some disruption from reopening their flagship hospital. So really clear tale of two different performances in their main markets. So that's the snapshot of how things are now. But what about tomorrow? Let's turn to our next section, the road ahead. This is all about how IHH is setting itself up, not just for the next few months, but for the long haul. This timeline highlights some really crucial moments to watch out for. The full reopening of Mount Elizabeth Orchard in Singapore, that's a huge deal. You can expect its contributions to really start ramping up and then level out by the middle of 2026. That should help fight back against some of the challenges they saw in that market. And over in India, finishing the Fortis open offer in November is a massive milestone that gives them way more flexibility to grow there.
And if we zoom out even further, IHH has laid out these 7 key areas for their long-term transformation. We're not talking about short-term fixes here. This is a full-on blueprint for the future. It covers the core of their business, like clinical and operational excellence, but it also looks ahead to things like new models for care and, this is critical, getting ahead on technology, data, and AI. It really shows they're trying to build a hospital group of the future, not just the present.
Okay, let's bring it all home in our final section, the bottom line. If you're an investor or just keeping an eye on the healthcare industry, what are the most important things to take away from this whole report? For me, this is one of the most powerful numbers in the entire report, 4.4 billion ringgit. That's the net cash they've made from just running their business so far this year. You know, profit figures can be swayed by accounting rules and all that, but cash is king. It's the lifeblood of the company, paying for new investments and fueling future growth. A number like this just shows a fundamentally strong and healthy operation. So we end with the question that really gets to the heart of IHH's story. They've shown they can grow the business and execute a smart strategy, even when things are tough. The big question now is about sustainability. Can this disciplined, focused performance keep delivering results as those global economic pressures keep coming? Based on what we've seen this quarter, they're definitely making a very compelling case. Thanks for joining this breakdown.